Hi guys, how are you? Welcome back. Let's do another video. We're going to start off with the this bond yield thingy. They're starting to fall. They're starting to gonna start to fan out. Problem is, previously we could do that and our eyes closed, say, "Oh, this is a great trade. Let's go out buy bonds and bet the farm." And we know a recession is coming, so we know what's going to happen. Problem is, this time is different, because we can end up in a situation where we have stagflation. So what happens in that scenario is that rates stay high, relatively speaking, for two reasons. One, inflation. Two, the dollar is weakening, and you need higher rates to keep the dollar firm. Okay, so it's not going to be that easy to do this trade. Now, the question is going to be, can we crash the economy fast enough where we end up in a recession before we get inflation? That's the question. And I don't know what the answer to that is, but we're going to pay attention. But this particular trade in bonds, because I have told people buy bonds, yes, for now, when it's coming out of stock, going into bonds, safety, blah, blah, blah. However, it's not that easy. And that's why I'm explaining it to you right now. All right. When you take a look at the dollar, it's tanking. All right. La, la. Okay, oops. Let me hold on. All right, there it is. Okay. So the dollar is tanking. Why would the dollar be tanking? If rates are high, tariffs are taxes, but the dollar is falling. Well, I'll explain it to you. The reason it's falling is because our allies are saying, you know what, fuck the US, I'm out of here. That's one. Same thing is happening in stocks. Okay, huge draw from foreigners getting the fuck out of the U.S. assets. Second problem is that if you're going to go into a recession, you're going to collect less tax revenue, which is going to make the deficit higher. Good. Yep. Okay. So if the deficit is going to be higher, okay, bad for the dollar. Right. Now we know that when the dollar weakens, that's inflationary. Okay. Here's another reason. Um, if you go back in time, what you're going to see, this is the balance of trade here, this red line. Maybe I should put it by itself. Hold on. All right, let me isolate it so you can see what's going on here. Okay. So look at the right side of the screen. It's about 5 billion back in 1992. That's how far back the chart goes. All right, it was about 5 billion, and then since then, the balance of payments have continued to increase. Okay. So what does that mean? That we are exporting dollars to the rest of the world as we import goods and services. Okay. So what happens if that reverses? What happens when, remember, as a world reserve currency, you need to export dollars to the rest of the world so they can have dollars in order for them to transact with. Okay, one, they need it to prop up their currency. What does that mean? Well, let's say I want to invest in India, and I want to, I don't know, buy some Indian bond, and they're going to pay me 10%. Okay, great. I want to go buy them. The problem is for me is that when I want to get out of my position from the Indian rupees, that I can give back Indian rupees, get back my dollars, and get the fuck out. Okay? If the amount of reserves are insufficient for me to transact, get my dollars back, and I'm stuck in that Indian rupee because there's no dollars, well, guess what? I'm fucked. Because that thing ends up hyperinflating. I'm sitting there holding a bag of shit. I lose all my money. Right? So in order for me, let me use this word. In order for India for me to be investable, I need dollars. I need to make sure they have sufficient amount of dollars so I can get out of my position. And it doesn't have to be a bond. It could be anything. It could be a factory that I want to invest in. It could be whatever. I need to know that they have dollars. Okay. So with tariffs, what we're doing is we're telling the rest of the world, everybody now, that, you know what? Fuck you. We don't want you to have surplus of dollars. That doesn't make sense. Because you cannot be a world reserve currency and not export dollars to the rest of the world. Because then you're going to start starving the rest of the world of dollar reserves. Okay? Not too many people are even talking about this. Now, think about it. That if you're India and you need those dollars, you need to run a surplus of dollars, and I've talked about this before. You need to run the surplus of dollars. You need to impose tariffs on your own people not to buy too many goods and services in the United States so you can run a surplus. You may be running a net import economy, but as far as the dollar goes, you got to run a surplus. Now Trump lied again, and he used the total deficit as a tariff, which it's not. They don't have the total surplus as of dollars for them. That's not a tariff. That's just the way it is. But just like he did to Zelensky, and he said, "No, we give you $350 billion," and meanwhile they'll only give him $75 billion in over 3 years. Okay, so again, the man is lying, like everything else. But I want you to understand this concept that we need to run deficits in order to export dollars to the rest of the world because they need those dollars in order for them to function. If they don't have them, then you're going to end up in a situation where something or some other form is going to have to fill that vacuum. And now that opens up the door to BRICS. Now, I'm not saying BRICS are going to be the one. I'm just saying it gives it life. It's possible where the BRICS can now, at this point, say, you know what? This is now the new world reserve currency. Now we have special drawing rights. The problem with special drawing rights is there's not enough of them. Okay? It's always been the problem. The other problem is that, well, it's not a problem. Europe can fill that void. It can fill that vacuum. All they got to do is come out and say, hey, Eurobonds. You can buy Eurobonds. Okay? And then they turn their economy into a net import economy so they can export euros to the rest of the world. Then they would go directly competing against the U.S. Since now we're not allies, they could do that very easily and fuck the U.S. up. Now, why would that fuck the U.S. up? Because remember, all those dollars that are all over the world, Mr. Trumchenko suddenly wants those dollars to come back to the United States. That's inflationary. That's more dollars chasing the same amount of goods. See the problem? So what happens? Dollar tanks. That's the third problem. You don't want those dollars back here. That's again, you know, how many things can blow up? I don't know. And I think that's the scary part about it. That's why I keep saying this thing can go down 75% like this. Because you cannot undermine trust in democracy, in government, in the economy, in stocks. You can't do that. It's like glass. Once it shatters, you can't put it back together. So while everybody's sitting there, you know, trying to honey dick you, this is the bottom. You want to buy because, you know, over the course of time, stocks go up. That's bullshit. Why is it bullshit? I can tell you that with 100% certainty. It's bullshit. Because this is not fixable by just simply printing money. That's the problem. You can't just print and say, well, the bank's fucking, you know, they're kind of blowing up. And it's not printing money, by the way. Right? I'm going to go out, borrow I'll make the banks whole. I'll get them back on their feet. They'll be fine. COVID. Well, you know what? I'll just give some money to everybody. Okay, we'll deal with inflation later, but for right now, I can borrow money, give money to everybody, helicopter money, and we'll keep the economy going, and we'll go from there. This is not one of these events. This is not the dot-com bubble. This is not a housing bubble where you can just make it whole by borrowing money. And this is what I've been complaining about for 2017. What is it? 8 years now? That, you know what? We keep printing money, printing money, printing money. It's a one-trick pony. La, la, la. There'll come a day where you won't be able to print fucking money. And then what? What are you going to do about it then? Or you do print money, but it does nothing. What are you going to do about it then? What are you going to do about it then? Well, here we are. And if anybody believes that it's Mr. Trumchenko sitting in his office at night, 2 o'clock in the morning, reading books, reading treaties, reading economics, reading history, reading the law, you got to be fucking delusional. I mean, there's something wrong with you if you believe that. Okay? So where is he coming up with all this bullshit? Where is he coming? He can't even speak English, the guy, properly. I thought I spoke bad English. This guy is fucking 10 times worse than me. So where is he coming up with that? He's just a puppet. He's a Russian puppet. That's all he is. There's a lot of great minds behind him in the Kremlin, sitting there all day long for years thinking about how to fuck up the United States. And it's always been about the dollar. Everybody's always against the dollar. They're after the dollar. You cannot sit here and say that he's trying, that he just came up with the stupid idea that, yeah, I need to bring toaster jobs back. I need to see more smokestacks around. We need more coal plants. Yeah. I think that's going to make America great again. That idiot? You think he came up with that? It's kind of like the same thing where when you look at Russians and they're like, oh, you know, you see Putin holding a candle in church. First of all, he's a KGB agent. He grew up in the Soviet Union. The Soviet Union were atheists. He's not religious. So why do you think he puts that front up? Because Americans are stupid enough to believe that crap. That's why. And of course some Europeans. He is by no stretch of the imagination a Christian. Okay? Suddenly they care about gays in Russia? Get the fuck out of here. They don't give a shit. Okay? They're so corrupt, and you can see it in their military. How can they have the second largest military in the world and they can't even function? They were running out of gas. There weren't sufficient parts. Some of the tanks were gutted. 3 years, and we're still sitting here fighting. Where are all the latest technology? They sank half of their fucking black fleet. Half of they don't even have, Ukraine doesn't even have a navy. It's all bullshit. Oh, you want to be red pilled? You want to be red pilled? Take the red pill. Yeah, conservatism. It's bullshit. It's all crap. And now you're going to tell me that Trump sits there at night reading the law of 1787, that he's going to invoke fucking war privileges and start deporting fucking Mexicans. And are you serious? What's the one nation that didn't get tariffed? What? Russia? Yeah. Yep. I wonder why. Okay. Unbelievable. Okay, so balance of payments. So we're going to run surpluses now. We're going to choke off all these little economies. They're going to start to blow up. Dollars in jeopardy. we're going to bring interest rates down, but the dollar is falling. You see the problem, right? So what comes first, inflation or do we crash the economy? I don't know. But that's what we're going to be monitoring. Again, I'm going to point out there's no fucking way that we're going to be able to restore trust and that we can print our way out of this problem. No. Nope, 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 nope. Okay? All right. What else? Sorry. So let's go back and let's take a look at this. This is important. All right. So what we have here, the blue, all this part here, the blue are the deficits. Okay? The red line are the balance of payments, balance of trade payments. Okay? Now what you're going to see is that as we started to import more and more with NAFTA and HAFTA and World Trade Organization, all this stuff, as a world reserve currency where we're exporting dollars to the rest of the world, what you see is that the balance of trade kept increasing over time, and so did deficit. Now, deficits are not the only thing that fund this. Private money creation does, okay? But they kind of go hand in hand. Deficits with import. All right. If, let's say, he holds them and he is successful, and he destroys world trade, and world trade starts to um, reduce, what do you think is going to happen to deficits? Is it going to start to come back up? No. 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 Why? Here's why. Because while you can, and this does happen in a recession, okay, you look at here, what happened here, right? You look at 2020, what happened? Imports fall off a fucking cliff, okay? The Americans stop importing goods and services because they're in recession, they don't have money. So trade falls off and imports are reduced. Okay. So the same thing is going to apply this time, that if we go into a recession, you may see that imports start to reduce, but what are going to happen to deficit? Yeah. As tax revenue starts to fall off, spending is already spoken for, it's already been approved by Congress, you're going to see that deficits start to increase. Problem. Problem. Less jobs, less wages, less tax revenue. So you got rising prices. I don't know. This is before we go into recession. You may have rising prices, falling dollar. Okay. And as we start going into a recession, deficits start to increase. Dollar weakens, but rates are still high. And they're trying to lower them to try to stimulate the economy, but that's not going to help you in any way because it's not something that is caused by unemployment because the economy just took a shit. It's because of tariffs, because of world trade. So you're not going to bring back fucking world trade just because you made borrowing cheaper. In fact, you're making it worse because you're going to try to stimulate more private money creation. So how does that work again? Remember, creditworthy borrower takes a loan that creates a deposit that creates money. Okay, that's the way it works. That's private money creation. So it's a really complicated mixed bag as to how this is going to go. But I'm just going to simplify it for you. It just comes down to trust. Undermining trust is very important. You can't just print your way out of it. You can't just lower rates your way out of it. This is a nuclear bomb that has gone off economically in the United States. And now the United States is nuclear bombing everybody else. We are literally at war with the rest of the world. An economic war. Okay? It's World War III. And we called it Liberation Day. Complete opposite of that. Now let me show you something else. This is the dollar inflation adjusted since 1971. We have been going sideways for a while now. Okay, you can see it right here. Oops. All right, you can see it right here. Been kind of stable since 2009, kind of going back and forth, trying to hold the value of the dollar. But now we are on the verge of collapsing. The next move, we shrink this down, is going to be down. It's going to be another one of these jobs right here. Next leg coming down. Right? So, bad juju. Bad juju. Sorry, I just realized the bottom part is not in. Okay? So this started in 2000. Bottom 2009. Maintained steady, and now we're going to go down. All right? Good. All right. Now, I've showed you many charts. This one is the S&P 500 relative to the money supply. And we got to levels that we saw back in .com days. Okay? Got all the way up here, and then look, boom. Okay, so this is the S&P relative to the money supply. And the money supply with the S&P should be right around here somewhere. That would be the ideal area. So we far exceeded that. Again, it was indicating that the markets are extremely expensive. And mind you, that this happened with the money supply growing exponentially during COVID. It just exploded to the upside, and I can show you that. Move it. You can see it, right? Look at that move. 40% increase in the money supply during COVID. Right? All right, so let's take a look a little bit at government revenues, okay? These are tax receipts. We kind of topped out at $4.92 trillion. Now think about it. Trump wants to give tax cuts to the rich. We're going to go into a recession. Tax revenues are going to start to fall. We're going to try to impose tariffs, which is a tax, which is going to create more unemployment, which is, you see how it snowballs, right? It's an abyss. So as tax revenues start to fall off, what's going to happen? The deficits are going to increase. Make sense? Good. Now, when you look at government debt to GDP, been rising, okay? 122% whenever this was taken in, I think, October or September or whatever, 2024. But what do you think? What do you think is going to happen? Of course, it's natural. It's going to start to increase. Now, when you compare the U.S. to the EU, EU is 80% debt to GDP. The United States is 122, and it's going to go much higher. So, what is that going to do to the dollar? Tank it. So we take a look now at the Fed fund rate. So Biden finally got inflation to start to come down. We're doing good. We were the envy of the world in terms of our economy. Everything was great. Trumchenko comes in. No, it's crap. I'm going to change everything. I'm the best ever. I know more than everybody. Okay? So now you're going to have a falling dollar. And you're going to do what? Lower rates? Does that make sense? You want to bring toaster jobs back to America and smokestacks, and you don't want to run any more trade deficits with the rest of the world. Okay, so when you bring those dollars back to the United States, it's inflationary, which means what? You don't want more money created privately through private banks. So you don't want to lower interest rates. You want to raise interest rates in that case if that's what you want to do. So you see the problem. All right, so now taking a look at this chart. All right, I said anytime we get above this level here, all right, anytime we get above here, bad shit happens. And as you can see, bad shit is happening. Okay, as you can see that I said when rates start to roll over, okay, when the Fed starts to lower interest rates, we're going to go into a recession. That's exactly what's happening. Okay, the problem is that the dollar now is falling. Usually not what happens, but that is what is happening. All right. You take a look at the U.S. dollar, Japanese yen. Okay, that looks like it's going to start to tank. So you got. Let me kind of draw this out for you. 1, 2, 3. The next move is going to be down for the dollar. Okay. We take a look at the euro. Take a look at the euro again. So the euro, you got a 1, you got a 2, you got a 3. Okay, went sideways, tried to break from failed moves comes fast move in the opposite direction. Problem is when it breaks, it's off to the races. Okay, so euro is the place you want to be. Gotta wait for the break though. All right, and then the pound. Well, the pound is breaking out again. It hasn't made a new high yet. Look at it. Okay, again, I'm going to show it to you. 1, 2, 3. Broke out, pulled back, didn't make a new low, and now it's breaking out. So, you want to lower interest rates when the dollar is about to get fucking decimated? I don't think so. But anyway, I don't want to, overload you. I know I did, but too much more. That's about it. This is the macroeconomics of it all. What Trump is doing is disastrous. Again, I'm going to come back to trust. You cannot rebuild trust. You can't print your way out of this one. So don't get honey-dicked. Please don't get honey-dicked. Oh, well, buy the dip, buy this. And let me show you that while we're at it, because I don't want you to think I'm crazy. Because a lot of people, they like cute little sayings, like little quotes. Over the course of time, stocks go up, blah, 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 all this bullshit. Really? Are you sure about that? Because the last time that China made an all-time high was in 2007. 2007. Do you have time to sit there and hold for almost 20 years? Where the fuck is... Okay? Look how much was lost. 71%. It's still down. What? 50%. You think that can't happen to the United States? You're wrong. You are absolutely, positively wrong. You're smoking, I don't know what, but Japan. Doesn't go back far enough. I have it somewhere. Hold on. Here's a little sucker. I've been waiting for it. Let's take a look at Japan. Come on, baby. Don't do me like that. Don't do me like that. %81 drop, top to bottom. Okay? It topped out in 1989. That's a lifetime before it even came close to breaking even. And we're not even inflation adjusting this chart. Forget about inflation. You don't have enough life in you. I don't care if you're 25 years old. You don't have enough life in you to wait that long. And if you think that cannot happen to the United States, you are fooling yourself. I don't even know what to tell you. Don't get honey-dicked. Don't get honey-dicked, you know? This is a buying opportunity. You're going to regret this in 5 years. Derp, 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 derp. These guys are going to get decimated. Remember, we've been 15 years now, more. We're buy the dip, buy the dip, buy the dip. You were 25 years old when you first started trading. Maybe you became a little bit conscious at 25 years old. Maybe you saw your dad trade or some shit. And all you've seen, 15 years, you buy the dip. Okay? Buy the dip, buy the dip, buy the dip. And you'll be forgiven. You're 40 years old now. You have no clue, no idea what a bear market looks like. None. And you're gonna listen. You're gonna do analysis. I don't know, Fibonacci and Hokumochikocho, and then you're gonna do this lines and SMA of the 50 and the 200, and when they cross, and then I'm gonna go and I'm gonna listen to my favorite guru, and then I'm gonna gouge if he's right this time or not right this time, and I'm going to listen to the other guy, and then I'm gonna sit there, and then I'm just gonna click buy and say I did analysis. And over the course of time, stocks go up. Come on, man. Can't be like that. Click like, subscribe, follow. This is not going to be easy. I'm telling you, everybody thinks the market is like, oh my God, it's down a lot. Nope. All right. Take care. See you soon.